Hey everyone, my name is Kyla, and welcome to my channel where I talk about the stock market, amongst other things. Today we're going to do a weekly
My mind is a barrel, loaded clips in my guns tucked. Literally stupid up in the booth, I do.
Janet Yellen caused some turmoil, and also Dogecoin potentially is going to land on the moon. So it is Saturday right now. Elon Musk is going on SNL here in just a few hours. So we'll see we'll see how that works out for him and Dogecoin. So what happened in the stock market this week? So the week ended pretty green with most of the growth stocks trading relatively flat to negative. We saw a lot of strength in industrials and banks as people continue to think about rotating into value versus staying in growth. A couple of big earnings numbers. So Roku had a pretty good beat. Feel like an undercover Amazon to me. Like they could be. And that's what gives us power, right? The could. So, but they were up almost 80% on revenue and 130% on gross profit. The number of streaming hours was a lot higher too because people are just chilling. But it'll be interesting to see how reopening impacts them, especially because they are pretty reliant on people being inside and staying and viewing movies from their home. So once we stop doing that, what'll happen to Roku? Beyond Meat had a pretty terrible quarter. They're still pretty unprofitable. Competitors are starting to close in. You know, there's this whole side of Twitter called, I don't want to call it meat Twitter, but like grill Twitter and barbecue Twitter, I guess. And I seriously think that we're going to experience like some sort of return to basics once we get out of the other side of this pandemic. I think that people are just gonna, I don't know what's gonna happen, but I feel like a lot of people are just sort of like itchy. I don't know. That's my thesis for Beyond Meat, is people are itchy, so they won't want the products. Solid thesis. Equinox is also going public via a SPAC with Chamath. We haven't talked about SPACs in a minute. They lost a lot of steam. So like I had a membership to Equinox. I went there once and it was very fancy. GameStop was upgraded from a B- credit grade to a B credit grade, which is pretty fascinating. It shows the power of collective of the crowds and also the value of collective belief behind an asset, because GameStop probably would be bankrupt if Reddit hadn't stepped in and saved the day. So Janet Yellen, and I have a whole video on this, so I won't spend a ton of time on it, but Janet Yellen came out and spoke this week and was like, oh, we might need to raise interest rates in case the economy overheats, and then the market lost its mind and was like, oh my gosh, Janet Yellen, how dare you even suggest such a thing? Oh my gosh, Janet, no, rates should be low forever, Janet. And so she backed up. She said, sorry, everybody, I didn't mean it. And there's like a few key points there. So she overstepped. She's not supposed to be weighing in on monetary policy. Her lane is fiscal policy. And the Federal Reserve is meant to manage monetary policy, so that is up to Jerome. But the thing was, she wasn't wrong. Like, the Fed is really easy, especially relative to other countries. So Robert Kaplan, the Dallas Fed president, is also looking for the Fed to kind of chill out, and stop, all the asset repurchases. So we'll see who ends up winning that. But the thing also, like, the market didn't need to be that dramatic. Like, I get it. Like, okay, like higher rates, we don't want that. And you've made that clear. But also, like, there comes a point where you do need higher rates, and it's not necessarily a bad thing. So, yeah. So the key takeaway is just that the Fed is being really patient, more patient than most of its peers, like I said. And there's a balance. Like, Janet Yellen shouldn't have weighed in, but also, the Fed should think about potentially easing up. But then, you've got the jobs report where there was such a massive miss, which blows my mind. How do we not know? How do we not know that jobs are going to miss that bad? It's almost like this big dramatic event. Like, that's what it kind of feels like to me. So yeah, with the jobs report, it's like, oh, should the Fed tap the brakes? Like, should they try to slow things down? Like, is the car already going too fast? There's a couple of key issues with the jobs report, like, child care issues, like people can't find care for their kids, so they really can't go back to work. Also, we're still in a pandemic. And also there's unemployment benefits that are relatively generous, and the unemployment benefits are outweighing what people used to get paid. So like, why would you go back to a job that, like, this is literally just, nobody would do this. Why would you go back to a job that pays you less than what you would get paid to, like, stay home for? Like, nobody should be mad at these people for making that decision. Businesses have to raise wages, but they don't seem to have any interest in doing that. So just a lot of headwinds to getting more people hired. So they gotta work on that. They gotta work on that. Because why? Why would you go somewhere that doesn't pay you money? I also think this is like a glimpse into, it's two things. The altruistic side of me is like, this is the creator economy. People want to be their own boss, which I think is true. People don't want to report to a corporation, which I think is also true. People don't want to be told what to do all the time and do menial tasks, which is also true. But then I also think that, there's a lot of speculation going on. So I think that there's a little bit of like stay at home and trade happening as well. So employment is still pretty high. There's still a lot of labor market recovery to wade through. So this jobs report is supposed to give validation to the Fed's outcome-based approach. Like, oh, it's really good that like we wait until we see the data, because obviously if we had raised rates and we had gotten this unemployment report, it would have seemed like we acted too fast. Also, we're seeing some outflows in investment grade bonds, so people are preparing for the taper. They think it's coming. It'll be interesting to see if it does come. Now the whole thesis is like what this jobs report is going to get. We're going to not even hear about it till potentially July. So we'll see. Anyway, so commodity shortage, that's still a really big problem. That keeps on popping up. I have a video on this too. Is it structural? Is it transient? If it is structural, we've got a pretty big inflation problem on our hands. And everything is actually trading in backwardation right now, meaning that people are really demanding raw materials. And so that's gonna put upward pressure on all sorts of prices and wages and jobs. So I'm watching commodities like a hawk. I know Jerome Powell's a dove, but I'm a hawk. I'm really worried. The ISM prices paid index is at the highest level since June of 2008. So what else happened in 2008? And container shipping is higher too, and it's really just a misbalance between supply and demand. So people are wanting the things and the things aren't thinging. Also lumber. Freaking lumber. Still haunted by lumber. Dogecoin, like I mentioned, that's really interesting because Bitcoin's total crypto market share has fallen to 70%, or fallen from 70% to 46% now. So Dogecoin is doing some crowding out, which is crazy. So the IRS is sniffing around, so watch out, people who are crypto billionaires. The IRS is coming for you. And there's a lot to look at. So Dogecoin is up 14,000% on the year, which is solid. That's so fun and so good. And it makes total sense that Dogecoin is up 14,000%. I was making videos about Dogecoin back when it was like 8 cents because Elon Musk was doing memes about it, and I was like, oh, every time that he releases a meme, it increases in value. And I look back and I'm like, I could have, if I had just bought some. I have some, actually. Disclosure. Also, Lumbercoin is coming. The crypto exchange FTX announced lumber futures because people wanted them, which I think is really cool. I think it's kind of neat that, crowdsourcing of information is available in the financial markets. Cathie Wood is having a hard time. ARK is having outflows just because of the tech rotation. So tech is pretty beat up right now. But also she spoke about her relationship with the Bill from Archegos, and apparently Bill was a seed investor in ARK, which feels fitting somehow. I've done a couple TikToks on Cathie, but like my main thing with her is like the risk management worries. Like I'm not sure if it makes total sense to like be a whale in a bunch of little small biotechs, and then I think their evaluation models around Tesla like literally don't make sense to me. But the Fed released their financial stability report. They mentioned that there could be vulnerability if risk appetite falls, which Yeah, that, you know, sure. So basically what that means is like prices could fall if people are like, hey, I don't like this anymore. I wanna be like, if we have a crash. They also mentioned meme stocks for the first time, which is pretty wild to think that the Fed is, yeah, I mean, it makes sense because those are probably like one of the key risks to financial stability is these meme stocks. I think all this boils down to is everything pegs on risk appetite. So Dogecoin, the Fed's financial stability report, GME getting upgraded, Yellen stepping out of bounds, Cathie and Bill being friends. It just shows that if people are willing to have a risk appetite, things can happen. But everything kind of pegs on that. Like, the Fed's not wrong. It's how much the market can handle. We could see a very complacent market over the next 5 years if things get ugly. Because a lot of, and this is something I've talked to a lot of people about, a lot of these younger investors, and obviously I'm 23, so I'm not an old investor by any means or older. A lot of them have never seen a bear market, and they think that, like, I'll have people in my TikTok comments be like, oh my gosh, like the market's down 1%, Kyla, what do we do? And it's like, y'all, the market, it does that. It does worse. So yeah, it'll be interesting to see like if we do have a massive pullback and a sustained pullback and the Fed isn't able to come in and save it, what'll happen and where things will go. So what did I buy this week? So I bought some Etsy. I really like their model. I think that the market's still underpricing them, and I think that there's like room to the upside. I bought some Tupperware. I bought some Peloton. I bought some Twitter. I bought some waste management, and I bought some Zillow. And I traded, I'm still getting a couple of vertical spreads. So I traded a spread on Zillow actually. So I traded a put credit spread on them. Also, Hank Green tweeted about me, and that was the coolest thing I think that has happened to me very recently. Hank Green, I'm about to get real sappy. Hank and John Green, they are two people that I have admired ever since I was in middle school, I think, when John's book came out. I think Hank Green and John Green have allowed me to explore my passions around finance. Because I know that there's people out there that have made things, what they do, how they do it, and just the fact, I mean, I don't know if everybody sees it like this, but just knowing that my videos help people and that people are learning, I just want to help people learn and make finance fun and accessible and not scary. And so to have like Hank Green and, you know, tweeting at me about Doge and margin, it's surreal. So Hank, if you're watching this video, that was really special. So thank you, Hank Green. You inspire me. So next week we have Roblox earnings, which whoop whoop, Roblox. Yeah, very bullish on them. We also got Marriott, we got Wix.com and Wish. That'll be interesting. And then we got Airbnb. That'll be kind of cool, seeing how people are traveling. Moving forward, Palantir's on Tuesday also, so some fun stuff. Aramark, they bother me. I don't like Aramark. We got a pretty dovish week ahead with Fed speakers, so they'll probably hedge against whatever I keep on doing that to her. Janet and Yellen, whatever Janet Yellen said. But yeah, so big takeaways. The market is reliant on people wanting to take on risk, supply and demand of risk, and Hank Green is Kyla's hero. Yeah, if you have any thoughts, questions, comments, concerns, please leave them in the comment section. And if you want to hear me talk for 1 minute every single day, mostly, I do that on TikTok, and I also post like fun financial policy videos on there, so come hang. And if you liked this video, I do these once a week, so please subscribe. And if you also liked it, go ahead and give it a thumbs up. Yeah, and I'll see you all soon. Bye.